Hey, what's up everybody? It's the People's Crypto. I'm back again with another video. We have some interesting new news developments as always in the cryptocurrency space. But before we dive into it, please keep in mind that this video is for entertainment purposes only. Please do your own research and please seek out a financial advisor with a background in cryptocurrencies and or digital assets. Alright, so the first story is titled Apple Censors Some Cryptocurrency and DeFi Features of Coinbase App. Apple Inc. has censored some cryptocurrency features of the Coinbase app. Specifically, Apple has blocked Coinbase from adding to its iOS app the ability to earn money using cryptocurrencies and access to decentralized finance apps. Apple versus Coinbase. Cryptocurrency exchange Coinbase has been struggling to get some functionalities approved for its iOS app. CEO Brian Armstrong detailed his company's experience dealing with Apple on Friday in wake of other companies struggling with Apple's app store restrictions. I want to share a bit about Coinbase's own struggle here. Quote, and he began elaborating. Here's the issue. Apple has told us we cannot add the following functionality in our iOS app. 1, the ability to earn money using cryptocurrency, and 2, the ability to access decentralized finance apps, sometimes called DeFi apps or dApps. And it continues to say, we've tried discussing this through regular channels with Apple, and I've reached out directly to leadership to request a dialogue, but we seem to be at a dead end. End quote. He shared on Twitter. Armstrong criticized Apple for disallowing iOS users the choice of earning through cryptocurrencies during the coronavirus-led economic crisis. And I quote, there are many unbanked and underbanked people in the world who have no ability to get a loan to buy a home or start a business, so this kind of technology has enormous potential to improve the world over time, even if it's still in its early days. It doesn't say that, but whatever. End quote, the CEO wrote. But I'm not surprised by this. I wouldn't be surprised if Apple is developing and working on something to get into the cryptocurrency space where they profit and benefit from a decentralized finance type of app or a centralized finance type of application, or if they're working on some sort of Apple cryptocurrency. Also keep in mind that they do have their Apple Pay, and their business model is essentially to centralize and control as much money through their App Store application. So they don't want any competition. They don't want you to make any money. And this is very, very similar to what the government did a long time ago when PayPal was trying to create their own electronic digital money. Very similar to how we have Bitcoin, but obviously the PayPal version would have been centralized and it would be in direct competition with the dollar. So the bottom line is these governments and corporations, they do not like competition. They want control. They don't like when you're able to make money without them getting their cut. And, you know, I would really not be surprised if Apple is working on a Apple cryptocurrency or a centralized finance application through their company. I would not be surprised. Also, remember, Facebook tried to launch their LBRY and the government stepped in and stopped them and said, hey, you can't do this. And it just so happens we found out earlier this year that the federal government is working on a digital dollar and a digital dollar wallet. So it's no surprise that they prevented Facebook from launching that whole LBRY initiative or coin or whatever they were trying to do. So it's not surprising. So Apple is somewhat taking a very similar route to what the government did in preventing companies from launching these currency tools, should I say. So they don't like that. They want to put a stop to all of that because they have their own interests. And this is like a major conflict of interest to them. So Apple's going to continuously stop companies like Coinbase. And they even stopped, I think, Fortnite not too long ago because they had some in-store app purchase that kind of bypassed Apple's iOS features. And then once they figured that out, they completely put a stop to that process in that application. So that is extremely interesting, and I won't be surprised if we hear more stories about other crypto apps having similar issues with Apple as it pertains to making money via DeFi. So I'm not surprised by that. It's just extremely early. I'm sure they'll come around sooner or later, or they'll have their own version of it. All right, so let's take a look at the next story. And this one is extremely interesting. So COVID-19 shook out retail investors but emboldened BTC whales. According to a report, it says some bought the dip, others decided to wait it out. As the COVID-19 pandemic began, retail and institutional Bitcoin investors took a very different approach. New research from OKX Insights and Cadillac, not the car company, showed the research, which looked at on-chain BTC transaction data from January to the beginning of August 2020, found retail investors largely pulled back and took a wait-and-see strategy with Bitcoin. Larger, possibly more institutional investors, on the other hand, accumulated Bitcoin. The report does not take into account transactions in the bulk of August and September when prices fell. The retail transactions, those representing less than 1/10 of a coin, make up a bulk of BTC movement. More closely track price fluctuations. These investors tend to be more easily shaken out of the market in times of high volatility and dramatic price declines, the report noted, which is exactly what the research found. And this is a chart of all of this by Cadillac, not the car company. Not spelled the same way anyway. All right, so it says the number of daily small BTC transactions decreased and took a wait-and-see approach. Once the price of BTC hit $10,000 in May, source Cadillac says based on the data, retail transactions decreased and deviated away from the price's trend, suggesting that retail investors took a wait-and-see approach as BTC a season-long post-crash accumulation period around May. All right, so I'm not entirely surprised by this at all. This just proves that probably those retail investors that took a wait-and-see approach or decided to wait it out are relatively new to the space. Anyone who's been in this space for extremely long time knows to buy the dips. There's really nothing to wait about. We know that Fidelity's in the space. We know that Grayscale Investments is in the space. The Winklevoss twins, I think they have 1% of all of the Bitcoin. And there's many other wealthy individuals in the cryptocurrency space. You have Sir Richard Branson. You have Tim Draper. You have so many other big wealthy individuals buying up Bitcoin and even advocating for it. You have the CEO of Twitter who came out and said he's buying at least $10,000 worth of Bitcoin a week, and I'm pretty sure he hasn't stopped, and I wouldn't be surprised if he's using other exchanges to purchase more Bitcoin. So then there's that. So if you're in the space, don't worry. When we get these drops, dollar cost average, try to buy up as much as you can. Obviously not investment advice. That's at least what I'm doing. So let's take a look at the next story. It says Morgan Stanley Strategist recommends Bitcoin as central banks ramp up money printing. It says Morgan Stanley Investment Management Chief Strategist and Head of Emerging Markets has recommended Bitcoin as an alternative investment to stocks amid central banks' massive money printing policies. He said that the alternative asset like gold and cryptocurrency could keep doing well while stocks struggle. Morgan Stanley Strategist discussed stocks, gold, and Bitcoin. Head of Emerging Markets and Chief Global Strategist at Morgan Stanley Investment Management. I'm going to murder his name, but I'm going to say it anyway. I think it's pronounced Rushar Shamar, discussed stocks, gold, and Bitcoin in an interview with CNN on Tuesday. The Indian investor and fund manager joined Morgan Stanley in 1996. Shamar began explaining that tech stocks and risk assets would really be hurt by rising interest rates. Despite the Federal Reserve indication, the strategist believes that interest rates could start to rise more quickly than we think, possibly even as early as next year. He explained that we have been seeing such high stock prices even though the economy is very weak. Next year, he expects to see the opposite as the economy rebounds and COVID-19 pandemic is behind us. However, he noted that stocks will struggle just because of the incredible support they have gotten from liquidity and interest rates. That support goes away next year. So we have someone from Morgan Stanley. I don't know if you're seeing the pattern here, but we've had Fidelity come out and say that they're offering Bitcoin to their accredited investors and institutions. there's so many people in the cryptocurrency space. Like, it's happening. People are buying, but not the people we think. It's the wealthy people. It's the people with tons of disposable income that's getting into cryptocurrency. People are slowly getting into it, but this is a problem because if all these wealthy people dive into the markets and not enough regular people get into the markets, we will just have probably one of the greatest wealth transfers in history. And unfortunately, the middle class and anyone below that will be poor. So these people are getting into the space. I don't know if you're aware of this. And keep in mind, they're mentioning Bitcoin and not any other cryptocurrency. Don't get me wrong. There will be other cryptocurrencies that survive, but there probably won't be that many. This happens all the time. Every, I would say, year or so, the top 10 or at least the top 20 cryptocurrencies change all the time. Bitcoin is the only one that has stayed around in that number one position. So please keep that in mind. And there's also only 21 million Bitcoin. So these institutions, people are coming out more and more saying that, yeah, Bitcoin, gold, and even silver are the things to probably accumulate to hedge your bets against a future currency collapse or a reset, as they've talked about. So just keep that in mind. And also remember, they're also working on this digital dollar and this digital dollar wallet. So these things are being created. We're going to be moving digital. We'll have decentralized and we'll have centralized. You just have to pick and choose which one you want. If you're waiting for the centralized, good luck, because life is going to be extremely hard for you. If you get into these decentralized cryptocurrencies, you have a fighting chance to possibly be wealthy and live a very, very good life. So please keep that in mind. Let's jump to the next and last story. And this one is a doozy. And we've seen this so many times with celebrities and rappers and any well-known public figures. It says rapper T.I. cryptocurrency fraud. Charged and fined $75,000 by the SEC. It says rapper T.I. and 4 other people, including film producer Ryan Felton, have been charged by the U.S. Securities and Exchange Commission over fraudulent token sales. T.I., or Tip as the rapper is also known, is also fined $75,000 by the securities regulator. It says rapper T.I. and film producer charged. The SEC announced Friday that the charges against rapper and actor Clifford Harris Jr., often known as T.I. or Tip, film producer Ryan Felton, and 3 others over 2 fraudulent initial coin offerings, ICOs. The SEC also charged 2 companies, Flick and CoinSpark, that conducted the sales. Rapper T.I., whom the SEC described in its order as a well-known musician, actor, and producer, participated in the offer and sale of Flick tokens, which are unregistered securities. Investors were able to buy and sell these tokens on at least 2 cryptocurrency exchanges using Ethereum and Bitcoin. The SEC detailed promotional material described Flick as Netflix on a blockchain, a company that would provide a streaming media platform with products and services that could be purchased with Flick tokens. The SEC alleged that between August 20th and September 20th, 2017, the rapper offered and sold these tokens on his social media accounts, falsely claiming to be the Flick co-owner, and asked a celebrity friend to promote the sale on social media, calling Flick T.I.'s new venture. The Flick sales raised approximately 539 Ethereum, worth about $164,665 as of September 20th, 2017. The SEC ordered states, adding the SEC's order against T.I. requires him to pay $75,000 in civil monetary penalty and not participate not participant in offerings or sales of digital assets, securities for at least 5 years. T.I. neither admitted nor denied the SEC's findings. Reuters reported Friday. His attorney, Henry E. Marzrix, I guess, says the rapper regretted getting involved with Felton, whom he believed to be a local entrepreneur trying to make it easy for new artists to enter the music industry. The news outlet conveyed The lawyer additionally claimed that T.I. never received $1 from Felton's failed venture. All right, so this is going to continue to happen. We've seen, I think, Floyd Mayweather, DJ Khaled, and so many others get caught up with these cryptocurrency fraud schemes. It's not the first time, and it's not going to be the last. If you see any celebrities promoting a particular coin, and it's like a company, if it seems just too good to be true, then 9 out of 10 times it's probably fraud. Don't get me wrong, you do have celebrities that will come out and say, hey, Bitcoin and stuff like that. That's cool, because Bitcoin is not a company, it's decentralized. But when you have these companies, the thing is, they make these offers to these people and say, hey, we'll give you $100,000 to promote this coin. It happens all the time, so it's probably going to keep happening. And these celebrities and artists and these people, high public figures, will continuously get into these issues with the SEC. Eventually, they're all just probably not going to just get involved with these type of scams. But it happens, and it will continue to happen. So let's take a look at the cryptocurrency prices. All right, so Bitcoin is at $10,312.93. Ethereum's at $364.67. Tether is $1 as always. XRP is 24 cents. Polkadot is $5.12. Binance Coin is $30.81. Chainlink is $12.07. Bitcoin Cash is $221.65. Crypto.com is 16 cents. Litecoin is $47.95. Bitcoin SV is $162.43. EOS is $2.72. Cardano is 9 cents. I think that's such a sleeping giant, honestly. Yeah, it's a sleeping giant. And we have Tron, 3 cents. Tezos is $2.60. USDC coin is $1 as always. Stellar is 7 cents. Monero is $85.92. Neo is $19.87. And Cosmos fills up the last slot in the top 20 at $5.20. And that is going to do it for the video. If you're listening on YouTube, please hit the notification button, subscribe, like the video. If you're listening on LBRY, you can send me a LBC tip, or you can share the video on the site. I'm going to include a link to the Ledger Nano X and Ledger Nano S back to school sale. You get 20% off, which is an excellent deal, because the Ledger Nano X, which I have and love, is extremely expensive. It's like $120, which is ridiculous, but you get 20% off, which is not bad. I'll include the link to that. You can also follow me on Twitter, and I'll include a link to that in the description of all the videos that I've talked about. And that's going to wrap it up for this video, and I will see you guys and gals later. See you.